Hey everyone, 2025 has kick-started with the demerger of ITC Hotel, where shareholders of ITC Limited would get 1 share of ITC Hotel for every 10 shares of ITC Limited they hold. And the record date is 6 January. It means if you hold at least 10 shares of ITC Limited by 6 January, you will be eligible for ITC Hotel shares. Now, ITC Hotel is one of the most reputed hotel chain in India, and the hotel sector in India is currently in a strong upcycle due to growing trend of travel in the country, and that has resulted in a much higher demand as compared to room supply. By the way, we have already discussed the hotel sector of India and key growth drivers in the past. So in today's video, I want to share all details related to ITC Hotel demerger, including its business performance as compared to its peers, and more importantly, is it worth investing in the company or not? And if yes, what is the fair price you should pay for it? Also, there is a very interesting situation that can arise after the demerger of ITC Hotel that can potentially create a great buying opportunity. So we'll also discuss that as well. Okay, before we proceed, just a reminder that an additional 15% discount on my weekly series would get over soon, as there's only a few slots left. So in case you are a long-term investor and looking for guidance, you can explore my weekly series. And if you need more details, I have explained the offering in last video. You can also reach out to my team. Alright, let's get started. Okay, let's have a quick overview about ITC Hotel. So it is one of the largest hotel companies in India with around 140 hotels and around 13,000 rooms as of October 24. Please note that around 35% of hotel portfolio is owned by ITC Hotel and remaining is a mix of managed and franchisee model. Basically, ITC Hotel runs on asset-right strategy, where the plan is to increase company's hotel portfolio while minimizing capital expenditure and operational risk. So apart from directly owning the luxury properties that are around 35% of its portfolio, ITC Hotel gets into management contract where the real estate developer continues to own the property and ITC undertakes the necessary renovation and management of the hotel. Company operates its hotel under various brands including ITC, that includes some monumental properties like ITC Royal Bengal, ITC Moria, ITC Grand Chola, then Grand Goa and so on. Then they have a brand called Mementos. By the way, they have Mementos by ITC in my hometown Udaipur, which is a beautiful property. Then a third brand is Welcome Hotel. Then they also offer a collection of handpicked boutique properties under the brand name Story. The fifth brand is Fortune, that include 3 and 4-star properties for both leisure and business travel. If you look at company's performance, in FY24, company's ARR, that is average room rate, has grown at around 25% year on year, and RevPAR, that is revenue per available room, has grown at around 18% year on year, whereas its occupancy stood at 69%. In last 2 years, between October 22 to September 24, ITC Hotel has added 30 new hotels in its portfolio, and company has planned to add another 28 hotels in the next 24 months. In the long term, company target to grow its portfolio to more than 200 hotels and more than 18,000 keys by 2030. So overall, ITC has a very strong presence in Indian hotel sector, which is growing at a fast rate due to rising trend for travel and tourism. And since it is part of ITC Group, it enjoys the best leadership team and strong corporate governance. Now let us compare the financials of ITC Hotel versus its peers to get a fair idea of financials. Alright, so this is the financial comparison of top 5 listed hotel companies in India that include Indian Hotel, parent company of Taj Group, Lemon Tree, EIH, which is the parent company of Oberoi Group, Sami Hotel and ITC Hotel. If you look at the FY24 revenue, Indian Hotel is the largest company in terms of revenue at which is 6,770 crore. Lemon Tree is 1,000 crore, EIH is 2,500, Sami is around 1,000 crore. ITC Hotel is the second largest company in terms of revenue, which is 3,100 crore. If you look at net profit, again Indian Hotel is highest at 1,330 crore. EIH is 678 crore, Lemon Tree is 180. Sami Hotel was in loss at net profit level, so we can't look at it. ITC Hotel, I could not find the data at net profit level. Now, if you look at the first half of FY25 revenue, your Indian Hotel revenue is around 3,376 crore, and ITC Hotel is again second number at 1,450 crore. Then EIH followed with Lemon Tree and Sami at similar level. If you look at the net profit for first half of FY25, Indian Hotel is 840 crore, then EIH is 230, Lemon Tree is 55. We don't have data for Sami and ITC. Next, if you look at revenue growth in last 1.5 year, so obviously in terms of absolute basis, Indian Hotel is the largest hotel company. But if you look at the growth, revenue growth is highest for Sami Hotel at 99% in last 1.5 years. Then followed with Lemon Tree at 85%, EIH is 80%, Indian Hotel is 75%, and ITC Hotel revenue has grown at 69.3%. Next very important parameter is EBITDA growth, which is the operating profit growth. So in last 1.5 years, EIH Hotel operating profit has grown at highest rate at 110%, followed with your Indian Hotel, Sami Hotel and ITC at par at around 80% growth. Please note that the Indian Hotel has seen a huge upcycle post-COVID, and that is the reason both revenue and profit growth in last 1.5 years is fantastic. Then if you look at the EV to EBITDA, which is the valuation, again this is very important. So Indian Hotel commands the highest premium at EV to EBITDA of 50, followed with your Lemon Tree and EIH around 25, 23 respectively EV to EBITDA, and Sami Hotel is the most reasonably valued hotel chain as of today at EV to EBITDA of 17. The question is, what should be the valuation in terms of EV to EBITDA for ITC Hotel? We'll calculate it shortly. Next very important KPI is debt to equity. So Indian Hotel has got the debt of 0.29, which is quite low and which is a good sign. In Lemon Tree has got quite high debt to equity of 2.23. EIH is again virtually debt free. Sami Hotel is also debt is on higher side at 2 because of the business model. They purchase the old properties and then they renovate it. ITC Hotel is completely debt free. So this is again very important because if they don't have any debt, they don't have to pay interest, and that would result in higher net profit for the company. Next, if you look at the market cap, Indian Hotel has got a market cap of 1.25 lakh crore, followed with EIH, which is 26,000, Lemon Tree is 12,000 and Sami is 4,400. The question is, what would be the market cap of ITC Hotel? So just one more thing I want to clarify. The reason why we have not looked at PE ratio and we are looking at EV to EBITDA is because in hotel sector, they take a debt because they have to grow, and for that they have to pay interest, right? And second important parameter is there's a lot of depreciation. And that is the reason their net profit is on lower side, and if you look at the P ratio, it would be on higher side. So EV to EBITDA is a better metric in case of hotel sector. Now the question is, what should be the valuation and market cap and per share price of ITC Hotel? So I have calculated some of the data and considered three cases. First is bear case, second is base case, and third is bull case. So if you look at FY25 estimated EV to EBITDA, bear case ITC Hotel should command a EV to EBITDA of 20. Base case its EV to EBITDA should be 25 and bull case should be 30, although your highest EV to EBITDA is 50 for Indian Hotel, but I think that is quite on the higher side. I think this is a fair number to give 20, 25 and 30 EV to EBITDA. Based on that, your market cap of ITC Hotel for bear case would be 24,000 crore, base case would be 30,000 and bull case would be 36,000 crore. Now ITC Hotel total shares would be 208 crore. And based on that, its value per share in case of bear case would be 115 rupee, base case would be 144 and bull case would be 173 rupee. So all in all, I expect ITC Hotel to list at levels of around 140, 150, which is the base case for the company. So the fair price of ITC Hotel should be in the range of around 140 to 150. Now let us look at the demerger detail. So ITC Limited is demerging ITC Hotel in the ratio of 1:10, where every 10 shares of ITC Limited would fetch 1 share of ITC Hotel. In order to get eligible for ITC Hotel shares, you need to have ITC Limited share in your portfolio latest by 6 January. Please note that ITC Hotel is a 100% subsidiary of ITC Limited, and after the demerger, ITC Limited would keep 40% stake in the company. Remaining 60% would be with the shareholders. ITC said that it will transfer cash and cash equivalent worth 1500 crore to ITC Hotel for growth and contingency requirement. Now before we close this video, there's an interesting situation that could happen post demerger. Let's discuss it. Okay, do you recall what happened with Jio Financials after its listing? Well, Jio Financials was delisted at rupees 261. However, its share price kept falling for next few days to touch levels of 215. The reason was that Reliance had announced 1 share of Jio Financials for every share of Reliance Industry. And index fund and ETFs that invest in index like Nifty 50 were already holding Reliance. So they also received share of Jio Financials. However, Jio Financials got excluded from Nifty 50 index. Hence, Nifty 50 index fund and ETFs had to sell the shares of Jio Financials. So Jio Financials witnessed strong selling pressure for next few days after demerger. A similar situation could occur with ITC Hotel. After the demerger, all index funds and ETFs that replicate Nifty 50 or Nifty 100 index would get 1 share of ITC Hotel for every 10 shares of ITC Limited. But ITC Hotel would be excluded from large cap index. So there can be selling pressure on ITC Hotels from index funds. Having said this, it would be interesting to see who buys the share. In any case, if due to selling pressure, ITC shares get into the range of 120 to 130, it can be a good buying opportunity. Having said this, you need to keep in mind that hotel industry is cyclical, where during upcycle, hotel companies' earning growth increases sharply due to increase in room occupancy as well as room rate. That's what has happened post-COVID. Due to high demand for travel and lower supply of room, the hotel sector has made a lot of money. But when the demand growth reduces as compared to the supply growth, it can result in fall in room occupancy rate, and hotel companies may even need to reduce room rates. So that badly impact their RevPAR. Having said this, currently hotel sector is in an upcycle that can last at least for next couple of years. In case you want to understand hotel sector dynamics in detail, you can watch my video. So this is it for this video. Now tell me in the comments, what is your take on ITC Hotel? Is it worth investing? If you find this video useful, do share within your circle. I'll see you next video. Till then, take care.